Good morning, everyone. Happy Feel Good Financial Friday on this 24th day of June, 2022. Summer is now officially here. Recap of the week that was and the weekend that is in front of us. Thank you for joining us. With me, as always, co-host extraordinaire and financial literacy consultant, Kim Lanciel, and real estate development expert, Sam Castellan. They are going to break down all that we need to know. But before we get to that, on this holiday shortened week of Wall Street, believe it or not, Wall Street is set for an up week. And I say that jokingly because it's only seeking the first up week in the last three and only the second up week over the last 12 weeks. It has been tough, but we are set to reverse it. A couple of things have happened. Interest rates, the 10-year has come way off. Its high reached last Thursday of roughly nearly 3.5%. The price of oil has come way off, roughly $20 a barrel, and we hope to see that translated into lower gas prices. And like I said, stocks are set higher. We'll talk about what that means for long-term savers. I know a down market doesn't feel good, but again, you out there, the viewer, if you're a net saver, a long-term investor, dollar cost averaging is a beautiful thing, and especially when markets are going down. But look for the dollar cost averaging episode in a future episode coming up soon. Kim, reporting as usual from New York City. Tell us what you're seeing out there.
Yeah, we're all still kind of seeing and feeling the inflation fallout. So, markets are looking a little bit better, but, people are still kind of keeping an eye on the prize, which is the prices. The prices of everything is still kind of like definitely very, very high. So one thing, beyond just like gas prices and food prices is that one thing that's, my world is working with nonprofits is that volunteers. So volunteers during the pandemic, they scaled back a lot, because they didn't want to be in person. It was, kind of scary for them. And also they just kind of didn't have the funds. So then the pandemic kind of started to slow down and more volunteers started giving back a little bit. But now we're kind of seeing it, especially like with seniors and people that actually have the time to volunteer, they're really not given as much money as they used to. So that's that's really definitely very kind of concerning. So, they're figuring out ways that they can give back, but the nonprofits are definitely sort of feeling that. So back to sort of like everyday Americans here, everyone is still that we're scraping by or they're actually scraping by, even it's like even worse. So it's hard for the, people that were suffering before and, really feeling the pinch to really get that cushion, up and running. It's just really not there. And one thing I'm seeing in the hospitality industry, because my son, he works, his summer job is at an Italian restaurant. He's seen less tips than last year. And, he is obviously, he's probably making 25% less. That's a lot for a college kid who wants a little bit extra savings for the school year, because that's his only opportunity to make money, just because he can't really have a part-time job. So, those people are making less, and people that are actually making it's their income is really, really helpful. And the reason really is because they're actually seeing people spending less on tips. They're cutting back on tips, and it's not right, but it's just
natural.
Natural. So, I don't know if you're kind of seeing that, but I went to a restaurant last night, big, another Irish pub, and it was crowded because of the NBA draft last night, but not nearly as crowded. And I actually overheard one of the waiters saying, people just aren't tipping this week. What's going on? If you had a little bit of financial literacy, you might really understand. But people are kind of spending a little bit more money on groceries. So they're eating at home and actually entertaining at home. So compared to last year, there's a 10% increase on the 10% increase of the percentages that they're spending on groceries. So it's clearly they're not going out. So it's just kind of goes back to, it seems like a lot of people are putting a lot of that money on credit card debt, and it's worse than it was last year. And it sort of is, sort of like continuing to have an effect on everyday Americans. And inflation, I don't know if it's going to go away anytime soon. It sort of seems to want to be lingering. Who knows what happens, but what can we do as Americans? all those other saving tips in regards to credit card debt, kind of cutting things out, looking for better rates on interest rates if you do have debt. And a lot of Americans still have a lot of credit card debt. It's kind of scary.
It's a double whammy because we talked about it in previous shows, the fact that not only are things costing more, but the cost of money is higher.
Exactly.
The Fed raised rates 0.75 of a point, and they're scheduled to do so again, either 50 or 75 basis points here in a few weeks in July. Sam, what are you seeing from Miami?
Yeah, so the same, George. It's interesting how that Fed increasing rates is really making a change in trajectory in the real estate market, right? As we discussed last week, the fact that people are less able or being more challenged in getting like those mortgages that they used to have a year ago. Now, instead of being able to maybe afford a house that is $1 million, maybe they can just afford a $700,000 or a $500,000 home because the mortgage monthly price is the same, right? And so we're seeing that reversal in the real estate market. We saw this week, like the CEO from Lennar talking about like how they are really on a challenge to decrease the prices in the homes that they sell. And, it's not only them, it's Toll Brothers, it's all these major, home sellers, and even companies like Redfin that, they kind of like guide on the clients to kind of get their deals. They're decreasing their workforce about like 10 to 20%, and the value of their stocks like really decreased from $80 to 13 or something like that. Like it was an 80% reduction of the stock value in a couple of months. And so we're really seeing a change in that trend in real estate where people are really being more challenged. And even here in Miami, right? Like any agent would tell you that maybe a few months ago they used to have like 10 people going and presenting an offer like above asking price, and right now maybe it's like 4 people, maybe it's 5 people. So we're gonna get to a point where as long as you have one person offering,
It's gonna be one person, yeah.
That real estate is gonna sell, but maybe not for the asking price that the client was looking for. So we're starting to see that challenge in the market.
It's amazing how things have just changed so quickly. You feel like this has only been the last 30, 60 days that we've seen this in real estate. And again, I saw this chart earlier this week. Average monthly payment, if you reset it every month for that an American was paying, was roughly $1,100 going back to 2017. And in the last 5 months, it spiked to $1,858. I mean, that is recessionary. So, no surprise of what the market has done. And we're seeing it happen almost fast motion, right? So Miami also had some big news, and I know that you're going to have a few hundred people looking for new homes if they're not renting. So just last night, Citadel, huge hedge fund, Ken Griffin's hedge fund firm based out of Chicago, announced their relocation plans to Miami, right there in Brickell Bay, financial district of Miami. So, and that's the third major employer to move from Illinois in the last 2 months, following Caterpillar's huge announcement a few weeks back, moving to Texas, and Boeing moving to Arlington, Virginia. So tough for Chicago and the state of Illinois. And again, no surprise, a boom for the 2 states that we have seen garner the most attention over the last 2.5, 3 years, and that is Texas and Florida. Anyways, that's about all we have this week. Thank you for joining us. Thank you, my co-host extraordinaire. And we highlighted the Top Gun Maverick movie 2 weeks ago. It did not disappoint. It was awesome. So I'm looking forward to this Elvis movie that opened today, and we'll see how it does in the box office. But with that, hope everyone has a great weekend. All the best. Sayonara.